David, are you bearish on banks here? I mean, do you think that all of the shares have a ways to go down?
We're actually not. From my perspective, I always try and, Lisa, try and think about, indicators like what bonds have done. Really, in the last 8 trading days is almost unprecedented. After the Fed meeting, we had a 10-year of, I think it was 203 or 205, and it was really since the trade tweets and announcement of tariffs that bond yields have collapsed. So I always try and be cautious when looking at market-based indicators like the 10-year when everyone's panicking and when everyone's rushing for safety like they are today. So from a valuation perspective, banks are actually starting to look a little more interesting and are starting to discount a more challenging NII outlook. If you actually talk to the companies, which we have over the last couple weeks, the reality is in the last 8 days, fundamentals at banks don't change that quickly. Loan demand is still relatively good. Credit is as good as it's ever been. The balance sheet strength of the industry is as strong as it's ever been. And if you look at, from a stock perspective, if you look at the yields or dividend yields of the banks, forget the total return yields, which encapsulates buyback activity, the spread between bank dividend yields and the 10-year is actually as high as it's ever been. So there is some value starting to emerge, we think.
David, where do you see that value? Which banks do you think are the best buys right now?
Well, there's a couple different ways to cut it. I mean, if you're looking for exposure or names that are not really susceptible to yield curve pressure, we think Capital One is one that makes a lot of sense. The stock is about 7.5 times 2020 earnings, still growing reasonably well. Credit's in good shape, and if the Fed continues to keep rates low, we think that has good implications for consumer credit. The other one, which is a little more susceptible to yield curve compression, but we think is quite a cheap stock, is Citizens Financial, CFG. The stock's got a 4% dividend, is at 8 times 2020 earnings, and is just over tangible book value, and a bank that is very profitable. So we think there are some values starting to emerge, and those are a couple ideas.